Hello, I'm Greg Bennell, and welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights to help boost your trading potential. Coming up, markets holding near record highs, but the Dow transports just can't keep up to the party. We're going to break down the technicals behind the divergence and what to watch. Plus, semiconductors are sizzling, the booming AI trend and strong tech sales, setting up the chip industry for what could be its best year yet. The trading debaters, as always, they're standing by. They're ready to go head-to-head on the bull and bear cases for CarMax. That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. We're a half an hour into the trading day. Let's get you caught up on the market action. We'll start with the S&P 500. Perhaps I overstated action. It's pretty much just flat right now, although this is a market that is trading near record highs, as we said off the top of the show. Let's jump into the heat map and see where the push and pull is to get that flat reading on the top line. You can see NVIDIA down a little more than 2%, taking some points off the table. Microsoft and Oracle, in particular, Oracle not doing this any favors either. Although across the rest of the board, you're getting some decent activity in the industrials, some of the energy names, some of the financials as well. But it's been about these tech names for so long, hasn't it? Let's check out shares of Kenvue getting a bump today. This is the maker of Tylenol. Yesterday, the stock hit record lows. That was before U.S. President Donald Trump held that press conference where they're linking the product, their flagship product, Tylenol, to autism. Now, anticipation of that news did send the shares lower. On the other side of that press briefing, we do have a bit of a rebound in the name, so an interesting one to watch. Also want to take a look at Firefly Aerospace. They're in the business of building rockets. This stock falling at the open. First quarterly report since going public last month. It's a bit of a disappointment, a wider loss than expected, lower revenue than expected as well for that second quarter. So it does have the stock under some pressure today. And that's your market update. Joining us now for more technical take of what's happening out there in the markets, Hiran Amin and Jason Nadek from our direct investing educational team. Welcome back to the program, boys.
Great to be back again, Greg.
Got it.
All right, we got a lot to get through today. We want to start with those Dow transports. What are you seeing there, Hiran?
Yeah, let's talk about the Dow transport. As you mentioned, Greg, they haven't joined the party. So just for everyone who's not familiar with the Dow transports, symbol is $DJT. So this is essentially made up of 20 of the leading transportation companies, none of which make up any of the 30 companies in the Dow Jones Industrial, so very separated out. So this would include your railroads, your airlines, your shippers and logistics leaders, so basically all the movers of the goods that we use, and especially more so for the digital commerce food chain that exists today. Now, one of the things we wanted to note was, when you look at the markets, as you mentioned, we've hit all-time highs on the Dow Industrials, the S&P, the NASDAQ. In fact, even the small caps have been joining this party as well, with the Russell 2000 actually breaking out of a big resistance zone and hitting the high point since back in like 2023. So they've even participated, but Dow Jones Transport hasn't done the same thing. And now, the reason we want to look at this is because of something called the Dow theory. So obviously espoused by Charles Dow, who was the co-founder of the Wall Street Journal as well, famously. And what this theory essentially states is that transports need to move higher in tandem with the industrials. So basically, those indexes need to move in tandem to confirm that there's a broader market rally or the rally has some legs to it. And right now we're seeing a divergence. So I've got the chart pulled up, and here's what I wanted to point out. I've actually got the comparison pulled up here. So this yellow line you see that I've highlighted, this is the Dow Jones Industrials performance so far from going back to December or so. It's obviously been leading the transports, which is natural. We did see it kind of going higher in tandem with it, but just up until this inflection point once it hit this top over here. And you can also notice that I've got another pattern that I've got formed over here, which is a symmetrical triangle pattern. Now this pattern usually can be either a continuation pattern, which tells us, yes, there's a trend that could break to the upside, or it could be a reversal telling us breaking to the downside. And the key is, where is it going to break once it comes out of this pattern? And we just saw it break just coming to the downside over here. So this is where we have the divergence, Greg, where we see the industrials going one way and the transports are taking another direction over here. So this potentially could be a bull trap when we see the broader market rally. But that remains to be seen whether it kind of course corrects. It's chopping right now sideways, but it has broken down to the downside on that symmetrical pattern. So one to keep an eye on.
All those big tech names get all the glory, but I know a lot of people, as part of their screening of the markets, they look to those transports, because in the end, things still have to arrive at my house for me to consume.
Exactly.
Interesting one there. But okay, so let's get back to the excitement over here.
Yeah.
The semiconductors. Show us the heat.
Yeah, let's talk about semis, of course. What I've got pulled up and what we're going to chat about is the Philadelphia Semiconductor Index. Ticker symbol is SOX. So basically, this is a modified market capitalization weighted index comprising of 30 of the largest U.S. semi companies. So names like your household staples, Broadcom, NVIDIA, AMD, TSMC, MU, there's a whole host of them. Now, it's no surprise they've been on a hot run, of course, recently. With all the capex spend that's been happening left, right, and center, it seems like it can't keep up with the number of billions that are being thrown out there. And it's actually, the index itself has been up about 10% over the course of September to date, which is quite a bit of a run there. The top 10 constituents within this index comprise of 60% of the weighting. NVIDIA is the #1 holder. That spot sitting about just shy of 14% now. Now, the key headlines that are going to make the move on this index that I just want to mention, two things. One is Micron. Micron, we know that they're a chip maker, but they also, they make the memory chips specifically. We covered them last week's show. They have earnings coming out today after the close. So they're going to be a big one to look at, because they've also raised guidance coming into this earnings, even getting ahead of themselves. And we know Broadcom and some other companies reported had big surprises in terms of the guidance and the customers that they have. So there's a lot of expectations on the street, and so the issue will be, the magnitude of the beat that they report today was what we closely looked at and what might move this index. And then the second one is NVIDIA, the #1 spot holder. Big news coming out of them. Just yesterday they announced, we heard the OpenAI relationship with Broadcom and how much they acquired. Well, NVIDIA is now investing into OpenAI, which is the maker of ChatGPT.
They all seem to be playing nice with each other.
They do, yeah. They all want to get a piece of the pie. And one of the stats I wanted to bring up was OpenAI requires, seeking to operate NVIDIA systems that require 10 gigawatts of power. Now, what exactly does that mean? Well, a gigawatt is what's being now used as a measure to describe the clusters of AI chips. And essentially 10 gigawatts is equivalent to about 4 to 5 million NVIDIA chips is what we're talking about. Wow. And just to put that in context, NVIDIA, that was their total shipment for this year and twice as much of last year in total, in its entirety. OpenAI is going to require that just on its own contract for themselves. So lot of bullish news or tailwinds behind the backs there. So that's going to be a key to look at this. The one thing is this pattern has broken out of this 5,900, which was previously resistance, which is now going to be support. So there's a lot of momentum on this. And moving into this next, we're in price discovery zone right now. But I am looking for downside gap over here that needs to be filled, which is still going to come near the support area, retest it and bounce off of that. That's when we know there's a valid sort of run still going to happen in the semiconductor space as a whole.
10 gigawatts of power, that's roughly 9 flux capacitors. But that's not what this show is about. What are you taking a look at? Tesla.
Yeah, we're taking Tesla. Let's get back to some autos and transports a little bit here. It wasn't that long ago that out there, the buzz in the market, and even here on this program, we were highlighting some of the, not only the political pitfalls of Elon Musk, but also some of the sluggish kind of overseas sales that were impacting Tesla's share price directly. Well, how quickly have times changed and the tables have turned, or whatever way you want to put this. And really nothing's changed in terms of the performance of the sales, but Tesla stock is up 79% over the last 12 months, and over the last about 2 weeks, 23% is what the stock's up. Big moves has been happening on the charts. A few things that have gone on to propel those newer highs has got investors looking to see if it can get into that kind of price discovery mode, looking towards new all-time highs. Elon Musk, they're trying to dangle some dollars his way, that $1 trillion pay package, which you can see on the chart that we'll see in just a moment, to see if he can bring its market cap up 8x over the next decade. Another news out of Elon made a personal investment of an extra $1 billion into Tesla shares. That certainly caused markets to move there. The Fed rate cut, they're not completely divergent from this as well. When we're thinking about new Tesla owners, hey, when you're looking to finance, the rates coming down is certainly a boon for their business. And lastly here, from an AI perspective, we can't get away from that either here in this area, is that there's been recent approvals to try their new robotaxi. Launched in June in Austin, Texas. Now got approval to run in Nevada and Arizona. So be looking to see more information on that. But quickly jumping to the chart, we can see that it was very range bound through the summer and into kind of, I guess we're now in the fall now, if we're being honest with ourselves. But on the news that we talked about, you can see that it gapped up a little bit from from that incentive package. So we can now see that the stock has moved considerably up to the top side. We had an infamous golden cross took place back middle of September, where the 50-day average moved over the 200. So we can see the stock. Before we get up to those new all-time highs, there's a couple significant price points around 430 and then 465 again, which we're going to need to be broaching. But as we progress towards earnings towards later in October, the stock is now only sitting 12% off that new high. So definitely be something to watch going forward.
Interesting stuff. Nice chart work as well. Thanks for that, guys. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try out the platform risk-free by opening a practice account. Just click on Try TD Active Trader, that button right there. When you're ready to switch to a live account, simply export your workspace, start trading for real. It is time now for Trading Debating, and this week the stock in the spotlight is CarMax, the largest used car retailer in the United States, known for its no-haggle pricing and nationwide network of dealerships. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors, significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's get back to that stock of the hour, CarMax. What made you guys pick this one to debate?
You kind of mentioned it already, Greg. They're the largest used car retailer in the United States. We also know coming out of the pandemic, the used car market, because of the supply glut with the new cars, just had boomed up. Yep. And so it's good to just do a temperature check again, see how the used car market's shaping up. Also, I looked at just what is the average new light vehicle cost these days in the United States. Average cost is around $48,000. And for people who are in sort of this macro environment who are price sensitive, they're probably going to be turning their eyes towards that used car market. And CarMax makes it very seamless, as you mentioned, no haggle. You can order it online, you can sell your car online, they'll come and do the pickup, everything right at your doorstep.
What about you, Jay? You in the market for a new car, used car?
No new cars.
I feel like a salesman. It's like, what can I do for you?
No, maybe if it's a classic.
No more debt. Got to pay off the first car that we've got now before we move on. But interesting backstory on CarMax as well. Interesting enough, they used to be a part of Circuit City, and they got spun off back in 2002. Really? I know. Who would have thought CarMax would have been the surviving brand out of that relationship? But yeah, here we are. They're the biggest reseller of used vehicles, but it's a very fragmented industry, right? So they're even being at the top of the pile, it's still a small percentage in terms of overall sales. But yeah, lots of interesting stuff to dig into.
All right, let's do it. Let's get some time on the clock and dig in. You each get your 2.5 minutes to make cases. Then we give you some time to counter with each other. As always, you draw from the hat, decide who's going to be the bull, who's going to be the bear. So Heron, pull the bull case. Why don't you get things going for us? Yeah,
let's chat about CarMax. CarMax isn't a business that is just selling cars. It's selling peace of mind is what I want to start with. They're almost like, you can think of them as the Costco for used cars. They're predictable, they're scalable, and they've built for people who hate the haggle, but they love the deal. So here's my one pitch to it, and why the bullish thesis behind it. We talk about moats. CarMax's scale, their geographic footprint, which is which is at the top of the industry. They have 250 locations nationwide. They've got transparent pricing, and they've got integrated finance and service offerings. So when you think about a dealer, we know they don't make a ton of money on the margins on the car itself is not a lot, but it's the peripherals. It's the financing, it's the warranties, it's the servicing, and they cover that full spectrum. They've got the in-house finance arm as well, which is in fact one of the biggest profit drivers. Loan originations earns the net interest and the fees, and right now their book on loans is nearly sitting at about $18 billion, and it collects about $8 billion in receivables in 2025 so far. Also, I'll mention just the macro sort of big tailwinds. We've got easing interest rates. We just saw the interest rates being cut, and we know for people who are doing these big ticket purchases after a home, it's a car. That's going to incentivize them to go and seeking those deals and buying them. And then also you got tariffs at the same time on the auto sector for newer vehicles. Most of the big manufacturers, Japanese and South Koreans, they're sitting about 15% tariffs on there. So that means if you're not going to want to pay that extra, shell out that extra money, then you're going to go to the used car market to look for it. Let's jump into the charts and just talk about what's been happening with CarMax. So I've just pulled up a chart, and one thing I just wanted to look at first is that the daily chart we're looking at here. And it's no secret, like they've been in a bit of a rough patch just coming into this year. They've topped out at this $90 level, which is resistance, which they've kind of peaked at each time, almost causing like a triple top pattern here. But what I'm going to take to heart on the bullish thesis on this is we've hit this low. This low, which was a monthly low going back almost 10 years, and we're seeing a bounce off of this price at the 54 to 55 level, which is a key support level. The other thing is, you notice I've got these trend lines. This is a bearish trend line. We see a break of that bearish trend line, but we've also started a new bullish trend line where we're starting to make new higher lows, and it's still respecting that, trudging along, inching towards that $72. The RSI is favorable in the momentum indicator they're showing as well, that case.
There we
Got
go.
in a few extra, just had to give one back to Jay.
Yeah, for last week. You remember last week? He didn't
I remember
forget.
that.
Yeah, you were very conscious of your time, whereas I'm not.
Wasn't too overtime there. So there's the bull case. What would a bear have to say about CarMax?
All right, let's take this the other direction. So this is a company that's long past its warranty, as maybe you were trying to sell here. Their growth plans are stuck in neutral, and it's going to take a hell of a salesman to kind of get this one off the lot, I'd have to say. All right, 3 quick things about CarMax. One is average used car prices are dropping, so this is going to significantly impact margins. Average used car prices are down almost 15% year over year, so it's indicating challenging market for resellers. You know, those tight margins. We're talking margins right around 2%. So yes, you better really have these other peripherals to make sure things can go in your way. So but at this point, the conditions are a little rough here. But and outside of that, competition is fierce. That fragmented marketplace really plays a part of that. As there's CarMax is the largest reseller, but they're making up only about just over 3% of the market. The top 10 resellers in the U.S. don't even make up 10% of the entire market share of these resellers. Competition is fierce. You know, there's other ones like Carvana is really trying to take a whole digital approach to this. So they've got some innovative competition that's really breathing down their neck. And the last thing is around those loan defaults. Sure, interest rates may have come down, but the auto loans holding roughly $1.66 trillion in auto loan debt in the U.S. alone. Repossessions were up 43% from 2022 to 2024. Speaking specifically about CarMax, they don't get a free pass here. They're noticing that 5.48% of their loans are overdue, and they've actually started to make increased provisions for loan defaults. So not great signs. Let's jump ourselves back into the charts now. I've just got a quick here visual to lead us into earnings. Well, guess what? The last 4 quarterly earnings that have come out have not been great for CarMax. We can see they've shed almost 70% on average over those next those last 4 periods. So we'll have to see how investors are feeling going forward. But I want to take a look a little bit at the longer term trend. The company has been making lower lows and lower highs over that particular time. Moving averages they are in distinctly kind of bearish territory, and it's been that way since early April. And the gap on the 200-day average is getting wider and wider from those shorter term averages. But when I start to think about nearer term trading, yes, there's been some support and resistance areas that we've put in. Like Hiran kind of had this one noted on his chart as well. $61 level was a very key support level. Well, guess what? That was broken earlier in August. What do we say when supports are broken? They turn into near-term resistance. That certainly has been the case. And it came back and challenged at $61 price point. Is now pulled back off. I know you're going to ding me. I'm going to stop this time. So let's go.
You don't get any grace points this
What a
time, Jay.
gentleman. But you do have 3 minutes to counter with each other. So take it away, gentlemen.
I'm gonna start with you, Jay, because you've got you mentioned about the loan delinquencies. You talked about used car prices are actually coming down. Actually, their stat is different, and maybe this is specific to CarMax. They've, in fact, when you think about one of the units of measure of the used car deal is they look as unit sales and they look at gross profit per unit. So these guys do both the used cars as well as wholesale. They're in fact gone up. So their gross profit previously was $2,269. They now sit at $2,294. So they're able to squeeze out a little bit more. Maybe the industry isn't, but they're able to find some value there. Even when you think about what they're expecting for unit sales for both their retail and wholesale used cars, they're expecting to reach 361,000, which is about a 9% year-over-year sort of increase that they're looking at there.
So we've noted, we've acknowledged that their margins are low with prices dropping, or even if they're holding steady, the margins aren't expanding here. You talked a little about their auto finance area being a boon for them. Well, they're actually seeing revenues declining. So they had a decline of 3.6% in from year over year. So that's a big thing for them. I wanted to jump back to my chart. So I want to show that, give another highlight to the trend of the stock as we've moved and rejected off of the $61 level. There's two other indicators that I really think to kind of lay this out a little bare. The momentum is kind of pulling away or continuing to have that bearishness. The MACD has crossed over the zero line and the signal line has crossed. So we're seeing those prices shift. You mentioned RSI a little bit either. I'll just quickly say this as well. The RSI it appears to be a bit of a leading indicator. The trend is still going down, but we're confirmed we still got lots of room before we achieve oversold. So the trend, there's really nothing going to be propping it up if the selling continues to abate in the market.
Well, look, you've got an earnings catalyst coming out in 2 days' time over here, which can actually change this. So you are right. Momentum is kind of shifting where the direction is. But if I look at my charts, I'm also still hinging on the fact that this trend line is being respected. It's bouncing off of that every time it hits this low. So when it came down here, we saw the bounce coming off of it. It's coming off here and inching towards. As long as it respects this and we don't see confirmation, we should see that move coming in. One thing I'll mention about the competition, Carvana. Let's not ignore them. When you talk about a valuation play, CarMax is sitting at a PE of 16.1. It's way below its historical average, which is typically around the 20x on the PE side. If you look at Carvana, they're at 90. What do I have? 91. So basically, Carvana is trading like a tech-like multiple. So unless they're have transformers, like their cars turn into transformers,
that'd
why
be pretty
would anyone
cool.
want to play with it?
Yeah,
you're not paying those valuations. And then delinquency-wise, when you think about it, people, it's an essential item. Vehicles, they move families, and as much as we want the consumers are going to try and ensure that they're going to meet those payments too.
I can leave us with one last thing. There's been significant insider selling led by CEO William Nash at over $10 million right around Christmas time last year. That's a nice way to join the new year right there. So.
I would actually pay less for a car that was a transformer because, you come out and you got to go to work. It's like, where's my car? It's like battling evil. It's like, well, I don't need a car, man.
Unless it pays you, Greg, then.
Sure, there's a whole business case here. We'll get into that. I'm not sure the technology exists. So nice spirited debate, gentlemen. Nice counter. Now you got some time to explain how you could possibly put on a bullish trade in the platform.
Yeah, absolutely. So going back to the charts, this is what I wanted to start with over here. I'm really looking at those key levels that we have in terms of support and where the next leg up could be in terms of resistance. We did see, as I said, this is like a multi-year sort of swing off of this support level, which is in that 54 to 55 region. Stock's currently at 58. We see it bouncing, but every time it's kind of hit this region in the past, it's inched its way up and back towards its just above its 70. The 200-day or 150-day moving average is currently sitting at 65. And the other thing with most analyst price targets, they're sitting at about that 63 on average, top price. And actually, that's the low, on the low side. And average sitting at like 76 and then highs in the 90. But here's what I want to look at. The trade that one could play if you were a bull, and if you wanted to get long exposure, meaning you wanted to use options to be able to mimic having exposure like a stock, then the trade we're going to look at, it's a mouthful, but it's called zero extrinsic back ratio call spread. Just call it the zero trade.
Say that three times fast.
Fast enough there. Let me walk you through what the trade essentially is. So as you know, with one of the things with options that hurts an investor or a trader is when you're buying an option, time value works against you and volatility also can work against you potentially. So this component of an option is known as extrinsic value. So what this setup essentially is doing is we want to eliminate that as much as possible. We want to get it to zero. And when we get it to zero, it behaves just like a stock. So the way we do it is we look to buy in the money calls. So in this case, I'm going pretty far in the money at the 47.50 strike on the calls. We're looking at a January cycle. We're looking about 90 days or plus out. We're buying 2 of these, and then we're selling an at the money call. So right now that's sitting at roughly 57.50. And what this does is that helps us bring that extrinsic value to kind of net even or neutral. And so the upside to this trade is it doesn't come cheap. So this one is costing us about $20 to put this trade on, with the 2 on the calls and the 1 selling the 1. And so it essentially equates out to $2,000, Greg, is the debit we're going to be spending on this trade to get into this.
All right, so you're spending that to get into the trade. What if the trade doesn't go your way?
The trade doesn't go away. That's what we stand to lose. It's the 2,000. So what's going to happen in this case is we need the stock to peel back below 47.50. We know that's a key level that we mapped up, but that's when we do lose. In terms of upside, it's really just up until the expiry. We have unlimited upside potential on this trade as long as it keeps going up. Okay. We'll be mimicking the stock.
Interesting one there on the zebra trade. What do you got for us, Jason?
All right, so on this particular trade, I know here and I chatted about this before the show as well. Like, this is a stock that only has monthly expiration, so you really want to be making sure you're mindful. And these aren't going to be set it and forget it type of trades. Especially with earnings coming up next week, the nearest options expiration isn't out till towards the middle of October. So it's going to be something, once again, not like Ron Popeil with his old infomercials. This is not set it and forget it. Keep your hands on the wheel with this stuff. But let's jump into the chain here. One thing I wanted to highlight for everybody here is on today's option statistics, it's telling you the current IV percentile is 76%. So it's right now the implied volatility is sitting at 76% of its range for the year. So it's quite near the top. When we think about options and its implied volatility, you're usually selling options into high volatility, because high volatility is going to go where? It's going to come down, right? So it's one of those things, if that volatility comes down, that premium is going to come down, meaning that even with moderate price movement, we may be able to buy back our options for less money. So that's kind of led me to my strategy, doing a bear call spread or a credit call spread to sell premium at prices above the market and see if we can get depreciation to then buy back at lower prices. Looking at my chart, I've kind of drawn this out for us here as well. Thinking about doing a $10 wide spread, 65.75 is the spread. The premiums happen to be relatively low on this. It's only bringing back us in $1, so meaning you're taking on 9 points of risk for taking in a max gain of $1. So if that's too much risk for not enough reward, you could consider doing an iron condor, meaning that would be you're selling a similarly a spread of a put spread beneath the price. So you're then kind of hoping to kind of split the gap on that and have it explain or expire between those two different spreads. But in this particular case, the stock, as you can see, it's trading down beneath this trend line. That's going to continue to push it down below the 65 if it holds through earnings. And even as we talked about earlier, those rejections off the $61 price point is taking it away from this. Our goal here is to have it expire worthless below $65. We're going to be making our max gain of $1 per contract. And once again, earnings is happening later this week, so we know this is something that when the volatility comes out of that, you'll be wanting to make sure you're keeping an eye on that, so you can have an opportunity maybe to close your trade a little bit early. You don't need to let this thing run all the way to expiration if it's giving you an opportunity to lock in some gains.
And if it doesn't go your way.
Yeah. So in this case,
talk about keeping a careful eye on it. You can always close out a contract.
Right. We don't. Right. That's going to be part of everybody's. There would be a suggestion for a trading plan, but when we're talking about credit spreads, your max potential loss is always going to be the width of your spread less the credit you took in. So in this particular case, it was just $1. So it's $9. You're risking 9 to make 1. So that's not always going to be necessarily an optimal range. That's where the condor might come in. But if we don't want to take on that additional risk to allow the stock to go down, sticking with this, it's a low probable event, right? We're talking over 70% probable that it's going to expire out of the money. But you're picking up pennies on this, just with the assumption that the trade is going to go in your favor.
All right, interesting stuff, guys. Thanks for laying out the bull and the bear cases for CarMax. Just a reminder to our viewers that the debate was for educational purposes, does not reflect our personal opinions about the stock. And before we move on, Jason, you're going to elaborate on the charting templates.
Yeah, we're going to talk about the charting templates here as I kind of set my chart back to blank in real time on live TV here. So the reason I want to talk about this is partly also to give everyone within the audience an educational opportunity. Every Wednesday, we teach classes on the Active Trader platform, and tomorrow will be no different. If you want to hear more from me, I'm hosting tomorrow's class all around charting and research capabilities with a big focus on charts, the scan tool, watch list tools, all that stuff. We're gonna have a whole hour to unpack it. So not just 2.5 minutes for me to hear my spiel. We've got a lot of time to actually live in the platform. But let me show you quickly here so we can go ahead and quickly add some studies. So we've got CarMax up on the screen. Let's go ahead and add a moving average and then something else. So we go ahead and click on the function button, the F at the top of the page, and we've got all of our different studies, over 100 that are here. You can scan through, or you have the filter at the top there. So if I just put in average here, we can go ahead and find the right one. Let's get I'm not seeing it. Simple, thank you there, Hiran. We're going to work together as a team here. So the simply moving average is dragging it out to the right. The default gets set to 9, so let's maybe put on the 200-day or the kind of a 1-year average. Let's go ahead and add a lower study so we can go ahead and make things look a little pretty on the screen. Let's go with MACD. That was part of my argument here today. We go ahead and drag that out as well. So 2 studies. I'm a big fan of keeping my charts simple. I don't want to miss the forest through the trees. And that brings me to the point where now that I've got this saved, I don't need to put every study on it because I can create different templates so I can cycle through them to really get that data that I want. So to save this for future use, next to where the function button is of that study settings, the one to the right is indicators. By clicking on that, all the way towards the bottom is a save indicator template. You can put on like 200 and then I can put in MACD as I spell it incorrectly. There you go. And after we hit this enter button, this study set is now available in my indicator list, so I can quickly cycle through that as well as any of the other ones that I find important to me.
All right. Yeah. Nice little primer there for what you're going to get from Jason Natnick if you take part in that class. Was tomorrow, right?
Tomorrow too.
Okay, you don't miss it. If you have a question about the TD Active Trader platform, or if there's a stock that you want to see these guys go head-to-head on, send us an email, td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It takes you to our TD Active Trader Live website. And if you can't join us live, be sure to visit our YouTube page. You can catch up on all our previous debates. The link is right there at the top. And once you're there, don't forget to forget. Don't forget to forget.
Don't forget to forget. Don't forget to not forget.
Not forget to like and subscribe. Follow the logic on that one.
Yeah.
All right, before I wrap up, gentlemen, some of the key things you're watching for the rest of this week. What is on the radar?
Yeah, so Greg, we're going to talk about macro as we traditionally do all the time. This week, we don't have a lot of volatility coming, but there is PCE numbers that are going to come on Friday. And we know this is the August ones that are coming out that get released, and this is the Fed's preferred gauge for inflation. So headline, PCE is year over year is expected to tick up just about 10 basis points to 2.7. So what the Fed will be looking at, obviously, is that this either stays in line or below the economist's forecast of 2.8% for the year. Any higher, investors might start worrying that the Fed's quarter point cut last week was a little bit premature and could allow for inflation to sink its claws back into the economy again. Core, of course, is going to be expected to remain at par at 2.9% there. Now, the one thing I will mention, the last time we saw a 3 handle on the core PCE was back in January of 2024. So the optimal level, again, for inflation is that 2% that they want to get it to, and getting that, and the closest we've gone to that so far is 2.6 back in April there. But other than that, another bellwether we're going to look at that kind of gives us a temperature check on the economy, and that's Costco. So Costco is going to be having their earnings report coming out tomorrow. Oh, sorry, not tomorrow. I think today's Wednesday, but it's on Thursday after the market close. So they're really a vital barometer for the discount retail sector that we have, and essentially gives us trends of what consumer spending habits and trends are shaping up to be. The expectation going into this quarter is EPS is $5.80 as the consensus on the street, which marks about 12.6% year over year, and $86.1 billion on the top line, at which marks 8.2% growth over year. Comparable sales expectation is to come is 5.5% increase there. But the big thing that investors will want to keep an eye out on is international sales have slowed for Costco 3 straight months. It's actually hit their weakest point in almost 2 years. Domestically in US and Canada, they've done great on same-store sales growth there. But also, we're starting to see trickling effects of the tariffs now coming in and percolating into the consumers, where most of the producers were kind of holding it close or absorbing those costs. Now it's actually making its way through the system. And so what it'll tell us for a business that runs on razor-thin margins, how those competitive prices are going to work. And also the big thing with Costco, which is a big profit driver, is their membership fees. Are they going to talk about potentially changes in membership fees or increases coming down the road? But let's look at the charts and see what the charts have been showing, because it's, again, been a little bit of a laggard. So after we saw sort of the correction coming out of April and the big bump up, we saw it top out at the 1065 level in like mid-June, but then it's been on this short to intermediate downtrend over here. In fact, it's formed this symmetrical triangle again, this pattern where we see price compressions with higher lows. We're starting to see a little bit of lower highs and higher lows forming, and now we're at a point where we're going to see that break happen to the upside or the downside. We also saw a double top just coming in over here. So what this means is just been rejecting off of this upper trend line over here, and it's kind of pushing towards this downward move. Now, coming into this earnings, market's expectation based on the options pricing of the at-the-money straddle is pricing in about a $35 move, which is notionally, it's about a 3% notional value of the stock. So it's either going to, if we see a really, big blockbuster number come out, then we might see it touch the 970, maybe inch towards that $1,000 resistance. On the downside, we're looking at 900 to the 880 sort of support level coming into this earnings. So that's what will be the key levels to look at.
Big one to watch. A lot of people will be watching it. Jay, we talked so much about those chips that empower AI, the memory, but the last time I cracked open a computer, they all have to sit on something, don't they? Your company, I think, builds the things that they have to sit on.
Yeah, this company builds a lot of circuit boards and things like that for high-end technology. But so we're talking Jabil Incorporated here today. It was a company that I was actually unfamiliar with, but so it's earnings were a little sparse over the next few days. So let's dig a little deeper. So it's nice to shine a light on it's a large cap company. So they've been on and off the S&P since 2013. Market cap north of 24 billion. They founded in Detroit in 1960s, forming partnerships with the automakers around automated manufacturing technologies. But they're now focused down at their headquartered now in Tampa. They're focusing on more higher tech applications, and like I said, circuit boards and high-end components. They actually even have factories that are making technology and components for AirPods as well overseas. So they've got a pretty diverse lineup there. But they're now also focusing on supply chain management and product design and giving actually engineering support to manufacturers to help bring their products to the market efficiently with their help. But the chart's also telling an interesting story, as much as interesting as the background of that company is. The chart you can see here, the stock has actually been quite a nice run over the last little bit. It achieved itself kind of up towards new highs and then retreated off that ever so recently in August. The stock kind of found support around $200. We've now got an inverse head and shoulder pattern that kind of formed over the last little bit. The projected move on this particular pattern pushed it into new price discovery. Not only has the stock pushed itself over the all-time highs it was previewing, it's achieved that expected move on that in reverse head and shoulders, and even we have a second candle that's pushed it even higher today. So firmly in price discovery mode for this. So earnings will be coming up next week. Earnings per share has beat estimates 5 consecutive quarters. So if they can make that a 6, we might see this be able to push even further. But time will tell. We've got a couple days to wait for that.
All right, interesting stuff indeed. And a quick reminder to our audience that we have now expanded TD Active Trader Live to 2 days a week. You just watched the Tuesday show, obviously. Join us on Thursday at 10 a.m. Eastern Time, same time as the show. We're going to be speaking with Chris Vermeulen. He's the founder of Technical Traders. And if you missed the Thursday show last week, the first time we went twice a week, it was David Rosenberg of Rosenberg Research. Fascinating discussion. You can watch it on TD Direct Investing's YouTube page. And I think you'll enjoy it. So check it out. That's all the time we have for this show, though. We'll be back next week for the Bear Bull Debate. We'll be back on Thursday with another edition of TD Active Trader Live. As always, investors should perform their own due diligence before trading. Thanks for watching.